Germany, the powerhouse of Europe, is running out of steam, and fast. What's happening right now is nothing short of shocking, and the implications stretch far beyond Europe's borders. For decades, Germany wasn't just another economy. It was the engine that kept the entire European project moving forward. Precision engineering, thriving exports, unmatched efficiency. Germany had it all. Remember the days when Made in Germany was a global gold standard? When the country's industrial might was the envy of the world? Well, those days are disappearing faster than anyone expected. And the latest numbers? They're brutal. In June, German industrial output fell 1.9% compared to the month before. At first glance, that might not sound catastrophic. But here's why it's a big deal. Economists were expecting a decline of just 0.9%. Germany's real drop was double the forecast. And this wasn't limited to a few fringe sectors. No, the slowdown hit the heart of Germany's economy, machinery and equipment manufacturing, the backbone of German exports, pharmaceutical production, a major driver of innovation and global competitiveness. Food production, yes, even the basics are faltering. When your core industries, not just luxury cars or niche products, start contracting, it sends a ripple effect through the entire economy. Worse still, this wasn't a one-month anomaly. May's numbers were quietly revised down, from flat to shrinking. That means the entire second quarter now officially shows contraction. This is more than a bad report card. It's the clearest sign yet that one of the world's most dependable industrial engines is seizing up. So, what's causing this sharp downturn? One major factor: trade trouble on a scale Germany hasn't seen in decades. Germany's economy is built on exports: cars, machinery, chemicals, pharmaceuticals. But now, a wave of US tariffs reaching as high as 15% on many German goods has slammed into its export machine. This is more than just an economic inconvenience, it's a trade war in everything but name. Iconic German car makers like BMW and Audi have already lowered their profit forecasts. Daimler Truck Holdings, a heavyweight in commercial vehicles, has slashed expectations, citing weaker North American demand. And remember, we're only in the first month of these tariffs being fully enforced. The trouble doesn't stop there. In June, factory orders unexpectedly fell by 1% compared to May. Analysts had been expecting growth, not decline. Even more worrying, most of that drop came from outside the Eurozone. Translation: global buyers, from Asia to North America, are losing confidence in German products. For a nation that depends on selling to the world, that's an existential problem. Here's another red flag. Germany's trade surplus just hit an 8-month low of 14.9 billion euros. Why? Because imports surged while exports fell. Think about that. Germany is buying more from the rest of the world while selling less to it. That's the exact opposite of what a healthy export-driven economy should be doing. Now here's the part most headlines skip. Germany's economic troubles didn't start this year or even last year. The reality is, Germany has been in a slow-motion decline since 2019. The pandemic was a shock, yes, but the deeper problems were already there. Over-reliance on exports to a few major markets, energy dependence on unstable sources, aging industrial base, rigid labor and regulatory structures, add in geopolitical shocks, supply chain breakdowns and now tariffs, and you've got a perfect storm. The Bundesbank, Germany's central bank, is openly warning that 2025 will bring stagnation. Growth projections for 2026 and 2027 are anemic. 1.1% and 1.6% respectively. That's a far cry from the 3-4% expansion Germany used to enjoy during its golden years. So, what's Berlin's plan to turn things around? The government is betting heavily on public spending on infrastructure, defense modernization, green energy projects. In total, some of Germany's top firms are pledging over 1 billion euros in new investments in the coming years. The hope is that defense contracts and infrastructure upgrades will jumpstart growth. But here's the risk. Relying too much on public spending while the private sector remains weak could leave the economy dangerously unbalanced. If inflation ticks up or debt piles too high, and both are likely, the recovery plan could collapse before it even begins. Not all the news is bad. Recent reports suggest German machine makers are seeing a rise in orders from within the Eurozone. It's a small shift, but it could signal a strategic pivot away from over-reliance on US trade. In theory, focusing more on European markets could insulate Germany from US tariffs. But there's a catch. Europe's own energy and trade policies have left it vulnerable. Without secure and affordable energy, ramping up production will be difficult, if not impossible. Energy is the lifeblood of industry, and Germany's decision to cut itself off from certain sources after recent geopolitical conflicts has left it scrambling for alternatives. Unless Germany, and the EU as a whole, rethinks its energy strategy, even the best industrial plans will be running on empty. For decades, Germany was a symbol of engineering precision, industrial discipline, and economic resilience. Today, it faces a new challenge. Not just how to recover, but how to reinvent itself in a world where the old playbook no longer works. Global trade patterns are shifting, energy politics are volatile, and the competition, from China to the US, is fiercer than ever. Germany has the talent, the infrastructure, and the know-how to adapt. The question is, does it still have the vision? The months ahead will be critical. Will Germany's industrial machine roar back to life? Or are we watching the slow dismantling of Europe's economic crown jewel? Whatever happens, one thing is clear. The outcome won't just shape Germany's future, it will reshape the entire European Union. What do you think? Is this just a rough patch, or the start of a long-term decline for Germany? Drop your thoughts in the comments below. If you found this breakdown insightful, make sure to like, subscribe, and turn on notifications so you don't miss the next deep dive into the stories shaping our world, because the next chapter of this story could change Europe forever.